Ladies and gentlemen of the crypto space, we're live on a Tuesday at 11:27 a.m. May 11th, and I have an interesting topic I want to talk about. We'll talk about the markets. We're going to talk about how we attack the markets and different things that we think about. Because what we do here is we tell stories about what the markets are. We know what they do. They appreciate and depreciate, but why? And we talk about human incentives, human emotions, what drives a person to take action, fear, greed, stuff of that nature. And these play a role in how I've crafted my narrative historically, and they guide me in my framework and how I think about where to allocate value, why to allocate value, and time horizon, how long to allocate value. And these are critical factors in managing capital. And that's the biggest reason I tell everyone to start with like dollars, crypto dollars on Aave or Yearn or eventually Convex and figuring out what is money, what is value. And I love telling people that have no experience with value allocation, your dollars are an investment. You've chosen to buy dollars. You have pounds, you can invest in dollars, you're buying dollars. You have dollars, you can invest in pounds, you're buying pounds. Value has nothing to do with the value holder. Value is it's an abstract concept in many regards. That it's an energy that's contained within a vehicle. Damn, I sound like Michael Saylor right about now. Isn't that funny? So that's real. Everyone well, non-value allocators love to think of their world in terms of dollars and how many dollars they have, and then the reality sets in that 15% debasement occurs. And if you're not outperforming debasement, you're literally working for nothing and it's bleeding you dry, which forces us to take action, which forces us to allocate that value, typically stored in dollars, into other systems that respond to the value fluctuation of the dollar, hopefully in an appreciative way. And interestingly, if the dollar is continuously depreciating in value, losing value, almost anything and everything is going to grow in value, especially if it has systemic meaning. If it has a network effect, or Raul talks about Metcalfe's law, there's a lot of folks that have argument with application of that. It's typically reserved or was created for communication networks, but conceptually, network effect overwhelmingly, I believe, is extraordinarily valuable, especially when thinking of these systems, especially thinking of the growth of these systems, because the number of participants that will eventually be in these systems are far beyond what the total number of people that are currently in these systems. And as that grows, capital comes in, liquidity comes in, value flows in. The use case of them grows. People are using them for meaningful things. Aside from value storage, transfer of value, speculation is the trivial aspect of these systems. None, the transfer of value is part of it, and storage of value, which is basically the definition of money. So dollars don't meet the definition of money anymore. How about them apples? So today's title is Narrative Scope Expansion. What's new? Let's do this. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Got Igor in the house. Michael's in the house. Always a pleasure, my friend. Wave Mappers, good morning, Noah and friends. Cheers to everyone. 28 people in the stream, 9 likes. We can do better. Let's hit the ground running. So I tell everyone to start with dollars and focus on returns on those dollars because you're outperforming debasement. Now, that's a critical part of a portfolio, your dollar position. because that's risk off. And dollars work in the crypto space. Dollars don't work in the legacy financial system. You're debted. You're going to financially die if you use just dollars. But dollars work in the crypto space. So we know how to handle risk off. We know how to handle the core of the portfolio, what should be the core of the portfolio. And we know risk on. Everyone speculates on these assets. They let it go up. But you have to know when to buy and the time horizon and when to liquidate and capitalize. And that's a complicated strategy because there's volatility. It goes up and down, up and down, up and down. So you have to have a strong framework for how to identify assets that are likely to just go up and then down a little bit and then up more and then down a little bit. And you get the famous staircase pattern, the cost basis reset cycle. And that's not so it's what we've identified is not just assets that are speculated to go up in value because people are going to buy it, like Dogecoin or whatever, safe moon garbage. We look to the fundamental properties. Fundamentals tell us to where to look, and technicals tell us when, is something I always say. So what we've done over the last year and a half is talk about monetary networks and financial systems, and we looked at the legacy financial system, and we found that these digital financial systems are extraordinarily analogous to such a degree that they have the same properties. They have inflation, they have a deflation, and they have velocity. They have burn components, deflationary pressure, incentivized supply disruption, where the inflation is actually used to drive deflation. This doesn't exist in legacy finance. And those are some of the most critical fundamental properties I look at that tell me where to look. And sure, technicals are pertinent because you don't want to look, we got the Matic chart up. We don't want to buy the dollar and then end up selling at 75 cents and you lock in a 25% dip. That's brutal. So technicals are critical to understand, at least to some degree. Like this candle, this wick right here is extremely bullish. That means everything was sold, was bought. That's insane. So I actually rode this. I rode this back down. And then I rode it back up and we're sitting at a buck again. And basically it looks like it's forming some sort of symmetrical structure. This is my asset of choice right now. I believe in my framework that this is everything else has opportunity cost between Matic and Ethereum. Because sure, you can invest in assets like I was talking earlier about MakerDAO, which is basically a deflationary asset. As more DAI gets minted, Maker gets burned. That's a heck of a monetary policy. And Bancor is a ridiculous monetary policy where volatility is compensated by the risk of volatility is transferred to the protocol, which is basically the monetary policy. And now they introduced the burn component. So uh, the vortex and the impermanent loss protection has an inflation and deflationary component, which is net balanced in most regards based on the data, and the vortex is an additional deflationary component. That's a heck of a set of monetary properties in the monetary policy, which indicate there's a likelihood for appreciation over time. A scarcer and scarcer asset will almost always increase in value. Look at beta magic cards, just saying. Um, So there's a lot of these types of assets in the crypto space, and that's what we focus on. That's what we focused on. At least that's what I talk about, and that's what I focus on. I encourage everyone to actually focus on that. You need to know the monetary policy of the assets you're purchasing. Doge is useless. It's a hyperinflationary asset that has no capacity to collateralize and will experience what it did in 17 and 18 because there's no purpose to hold it. The only purpose is for it to appreciate, to liquidate, to capitalize. So collateralization actually, aside from inflation, deflation, and velocity, the capacity to be collateralizable, that's where my narrative expansion is growing or increasing. If you could collateralize an asset, that's another deflationary pressure because that will drop circulating supply. If you can access the equity in an asset, there's no point in selling the asset. You don't need to sell the asset to capitalize. You can access the equity and use that equity to capitalize, hopefully in a risk-considerate fashion. And that's where I'm structuring a significant part of the portfolio. Now, this does not neglect that I feel that the core of the portfolio should be dollars and working, but I think it works hand in hand with my scope expansion. I believe that dollars will continue to be debased because the Fed cannot let the system unravel again. It's not like 2000, it's not like 2008. They can't let it unravel. They can't let the liquidity event that occurred in 2020 occur. They can't let it occur again because the retirement population is dependent on that value, and the entire system has social services, Social Security, Medicare, Medicaid that they owe to these people by law. So they can't let the value, the pension systems collapse. They can't let Social Security collapse. Because otherwise you have a humanitarian crisis, literally just the domestic first world humanitarian crisis with the retirement population. So the only course of action is to uh, keep the system solvent and do exactly what the Fed has been doing, and they will continue to do it. And there's no saving the system, meaning there's no return to normalcy. There's no Fed clearing its balance sheet. They will be forced time and time again to uh, ensure the system is liquid. And that means continued debasement of the currency. We're not seeing inflation based on almost everyone's metrics, and this is why I like Raoul and Stephen Van Meter. Stephen Van Meter sees deflation everywhere, and I agree. So this is where my scope expansion comes in, watching Stephen and Raoul. So if Stephen's right, which I agree with, we're not experiencing inflation and everything is net deflationary, then we have a constant deflationary pressure on the entirety of the system. So if that's true, and we're not seeing, and if you look at the M1 denominated charts for the S&P, NASDAQ, so on and so forth, the M1 denominated, they're destroyed. So the value of these assets are not increasing. The price in dollar denomination is increasing, but that doesn't mean jack shit. If you consider M1 and the total supply of money, total money supply, that's not increasing. And if you take a peek real quick, I'll show you what I mean. SPX, M1. Daily chart. I'm sorry, let's go to the monthly chart. So if you look at the monthly chart, there's a couple of very stark realities. Here's 2000, here's 2008, and here's March 2020. So the value of these assets are not increasing, period. Uh, it will, the value of the dollar is decreasing because look at the volume. Look at the volume on the monthly. So it's picked up, but look, compared to 2008, the volume's down. So we're seeing markets at all-time high price valuation, but the volume isn't up. And this is what Raul pointed out in one of his more recent videos. So that means they're not growing in network effect. It's not like more people are populating value or pushing value into these assets. It's just the churn of the same amount of capital, or maybe net value. Maybe there's more dollars because the price is higher, dollar denominated, but there's no more value in them. It's been crushed by the debasement of the currency. So if you combine, or if what I'm doing is combining Raul's conversation pieces with Stevens, if we're net deflationary and just period, there's no structural inflation. We're not seeing that. The demand for dollars, and if we talk about Brent's theories, the demand for dollars, you can never meet that. You would have to print hundreds of trillions of dollars, probably quadrillions. There will always be an insatiable demand for dollars. So net deflationary, the value of these assets isn't increasing. Therefore, and they have to print because otherwise they have the retirement generation humanitarian crisis. So it must be the reduction in value of the dollar. It's the only logical conclusion based on three uh, very important macro thinkers. So if you look at the MACD on this chart for the fun of it, that thing is about to rip. And if you look at 2000 and 2008, after the back D hits the signal cross on the monthly, you're talking about 100%. So that's 100% from 2008 to the most recent collapse, and here it's 78. So if you apply, so this right here is the same expansion that we had from 2008 to 2020. It'll be 257% from the bottom, which will bring us up actually to long-term trend resistance, which means there we have a trend long-term moving average breakout. My God. So my opinion, equities markets go multiples from here, 2, 3x, and maybe they break out. Like, look, this broke above trend for a bit. So if it breaks above trend, you're talking about 300%. So I expect equities markets to rally from here, and that's not where I'm going to place my bets, but that's the story. It makes sense, makes logical sense. So what does that mean for the crypto space? And that's probably where we're heading next in my story today. Let me talk to people in the stream. John McGuire's in the house, 2710, 4 minutes behind. Hey, hey. Gia June having a walk at night in China now. Enjoy, my friend. Enjoy. Tim in the house. DGen in the house. Glad to listen to your voice while waking up. Yeah, big world. I love that you're waking up. I've been going for like a billion hours at this point. Cheers. Any way to insure deposit assets in Polygon? Yeah, Nexus Mutual and Armor Finance. Sonny, good morning, my friend. We can do better. Damn right. Heirloom in the house. Wi-Fi is rising, but I don't understand offers yield or staking. Wi-Fi is an extraordinary governance asset for a platform that is probably one of the best positioned to become an industry titan in the coming decade. We're talking about like just I can't even put words on it what they could become because of the network effect what they've created with crypto derivatives and also their technical capacity, the team of persons that they've acquired that are able to deliver consistently and iteratively. But it's not an asset for myself, and I'll explain where I'm heading with value allocation. Uh, Hex is a hyper deflationary asset that has supply disruption, which entails when those CDs become mature, it will experience a liquidity event to the downside. I think the average time was 4 years for the maturation of many CDs. And at that time, people are going to be taking 30,000% profits. It will crash the price. So, what people are seeing with their 30,000% gains is unrealized gains. When you have 30,000% unrealized gains and everyone at the same time has a capacity to liquidate to realize those gains, you're going to have a liquidity event that'll crash. The system will crash or the price will crash. The problem and the most annoying thing with monetary policies like that is it takes years for it to play out. And it's just an asset I would never, ever allocate value to. Yeah, Black Thursday for DAI. Yeah, so that's cool. Good point. So MakerDAO is extraordinary for 100% reserve equity access system. Um, Maker is a deflationary asset, and the only time it was inflationary was to restore the peg in March 2020. Under normal circumstances, under optimal or proper collateralization, safe collateralization, it's a deflationary asset that can be inflationary to maintain the function of the system, which is to maintain the peg of DAI. So Maker works. And what's fascinating is we saw it work effectively and sustainably under one of the worst liquidity events in history. Uh, I think that's a testament to what they built. Um, hey, no, what's your current APY and XBNT and X token? I'm not, I have not allocated value to that currently. That my position or my value allocation is very different at the moment. My Bancor is on Bancor. And I have cash on Bancor, and I have a couple of other things, but mostly cash and BNT on Bancor. So I'm not touching anything with these gas prices. I'm not paying these fees. I'm on Polygon. You guys know I have a decent portfolio, but I'm not paying three, four, $500 transaction fees anymore. When Polygon is wonderful, it does everything I need to do. In fact, I could collateralize debt. I could borrow. I could leverage. I could earn yield on dollars. That's why Curve and Aave have changed the narrative for Polygon. You have the 25,000% appreciation for Matic over the last 2 years, but that's irrelevant. The story is different. The narrative is different, and that was less than a month ago. But do you think Michael Saylor is way overexposed to Bitcoin? No. The Bitcoin is the velocity of Bitcoin is collapsing. Bitcoin is what U.S. bonds never could be, or what they want to be. It's like U.S. bonds are jealous of what Bitcoin is becoming. Um, Bitcoin is the ultimate collateralizable asset, and that goes into the good portion of where I'm allocating my portfolio at the moment, which is a combination of risk on and volatility mitigation, which kind of goes hand in hand with the LP positions I've talked about historically, where you pair with like a USDC stablecoin to mute the volatility, which will also mute upside appreciation as well as downside appreciation. That whole option straddle combined with the dividend story that I tell you guys. So I don't think he's overexposed to Bitcoin. I think you can just play Bitcoin. Bitcoin appreciates at 200% per year. But this DeFi stuff is extraordinary, and I would like to play both. But he runs a business. He has all the money he needs for the rest of his life. So that is the play. You have to play your cards. You have to play your hand, and that is overwhelmingly suitable for his hand. All he needs to do is own Bitcoin. Maybe he'll do a 5% allocation to Ethereum at some point, maybe. He doesn't need to. He has no need to do it. Anna's in the house, always a pleasure. Would you listen to your opinion about Stake DAO? Stake DAO's cool. Derivative assets, and yeah, the Polygon position for 60% on stables. Wonderful. In fact, I might actually entertain that, albeit that's compounding. Whereas with Curve, Curve is giving you your Matic emissions. So I opt for Curve at the moment. How much SHIB do you have? Don't. I need a head explosion graphics designer. What a waste of time. Ren screwed themselves in BSC and Solana chains. No Polygon activity, but community fundraised to pay for the BSC and FTX ecosystem. I don't think about Ren much, and frankly, I don't think about Ren at all. I denominate in Ren VMs. Ren VMs are great. I just don't think about Ren much. I'm interested in the volume on the Ren VM network. Noah, does it bother you that Polygon is quite centralized by Binance? They're not. There's plenty of validators that are outside the scope of Binance, and Stake DAO has a validator. Plenty of other folks have validators if you look into it. But Binance, it was a Binance IEO, so they own a large portion of Matic. But I'm inclined to think, looking at the chart, there's been a significant amount of cost basis reset. Matic USDT, meaning value has transferred away from their hands, probably to a great extent. I don't know off the top of my head. Chain analysis, Nansen would probably have a better picture. But overall, what matters is network effect, and I think this everything else has almost everything else has too much opportunity cost for a significant portion of the portfolio. So the small portions you could be risk on, Visor, Method, Mist, and X token, XDK, and so I got some cash in Bancor and BNT, and I have Cosmos and Polkadot and the Ren VMs, but those are only smaller portions of the portfolio. Um, I think I'm in currently a risk on position. So the risk on, when you're doing a relatively large risk on play, I've talked historically about the LP positions paired with dial stables to mute volatility, capitalize on volatility, and you're going to cap your upside and downside. But now so Bancor actually fits the bill right there with its impermanent loss protection um, in many regards. But I'm focusing more so on right now Aave and MakerDAO. If MakerDAO was on Polygon, but Aave, I'm borrowing stables against my um, Matic, and to minimize any risk whatsoever with the borrow capital, it's on Curve. I literally have no risk. I'm borrowing at 3-4%, and I'm yielding 30+%. So that's called the cash and carry trade. That's good, and conceptually that's mitigating the volatility associated with Matic. So clearly we had a big dip yesterday, which basically dipped to, I believe that's the 50. I don't have my damn color scheme right. Yeah, that's the 50 SMA on the 4 hour. So that's all the dip was yesterday, to the 50 SMA on the 4 hour. This chart is breathtaking. I believe this is heading in a very bullish direction. The chart looks extraordinary bullish. So I want to forget about my position, let it sit and mature into what I expect it to become. The network effect just started. But I need to mute the volatility, or at least attempt to capitalize on the volatility, and I'm going to do that with cash. And cash, not going to experience a chance of liquidation. I could get the cash from Curve. I could rebalance the debt position. So there's basically no risk in the debt. If the cash and carry trade fails, if the debt becomes too expensive, it's probably just temporary, transient, and Curve is going to outperform the debt obligation, the requirement to service the debt. So that is a significant portion of the portfolio currently. When you see a clear opportunity, conviction is warranted. But it can't just, this is my conviction. And it's not like everyone you can't share other people's convictions. You have to come to the realization for yourself when something warrants a certain degree of conviction. I mean, there's a lot of assets. Look, you could have conviction in YFI. Can you borrow against it? The monetary policy is solid. It's a very limited supply. It's scarce. Does it have a burn component? It's not inflationary. They did that one-time mint to set up the critical mass liquidity for them to actually form an organization and developers and start that system. But it doesn't fit the monetary properties I look for. I want assets that have critical mass liquidity. Well, I want monetary. This isn't even a damn asset. This is a monetary network. You're watching the birth of a monetary network, and the only thing preceding this is Binance Smart Chain, and previous to that was Ethereum. It has critical mass liquidity. It has Curve and Aave. It has a capacity to collateralize debt positions, which means circulating supply of assets are going to be disrupted, which means money supply is going to grow because you have debt and then you have the liability. So that's basically how the legacy financial system creates money. And that's extraordinary. There's nothing else going on like this. My eyes are on Solana. My eyes are on Avalanche. My eyes are on Phantom. But they're not there. They don't have, sure, there's a lot of attention. There's even a lot of attention for Cardano. But they don't have critical mass liquidity. There's how many billions of dollars on Aave? And there's Aave. Sure, let Solana, let Phantom get Aave, or a capacity to lend and borrow, and then let me see a couple $1 billion forward. Let's see the exponential rise of activity, developer activity, and retail participants. There you go. And that's when the fundamentals warrant looking at the technicals for when to apply value. So I'm not interested in the fact that, sure, Phantom looks probably positioned to be next. Great. Let it find its way. Let it become next. It's not there right now. And I don't care if it goes up 10x from here. Once it has critical mass liquidity, then the story changes. And that's what has occurred here. The story changed when Curve and Aave set up shop and provided the network the tools to pretty much establish a financial system. Mike, you're very welcome. It's a pleasure. Tim, thoughts on DEXs on Polygon, Krill, Polyzap? I ignore them. CRX, Chico said that they control at least 30% of the nodes. He did some good research on it. Okay, that is considerable. What's pertinent is once a financial system is up and running, are we talking about destruction or malicious activity? They want to profit for like anyone else. We all have a pretty negative sentiment about Binance, and I especially do. But I know they're capitalists, and I know they want to succeed, and this is on the path to success. Interesting story. What are your thoughts on real estate and relates to this story? Real estate is illiquid. Drives me nuts. For me, real estate has maximum opportunity cost. I could buy and sell something in seconds, where in New York it'll take 3 months to sell a property. I have absolutely zero interest in real estate. Frankly, it annoys the shit out of me. But can you make money? Sure. It depends. It's all you got to play your cards, and if that's your cards and that's what you like, and then that's okay. But it's the same exact thing, supply and demand. That's it. What's really amazing with Polygon is that a small player like me can actually use DeFi. Yes, it's a fraction of the cost of Binance Smart Chain. Fraction of the cost. The only reason the liquidity hasn't flowed in is I have no idea. Seriously. Taiki's in the house. Always a pleasure, my friend. Polygon is the best right now of the L2s because it's an EVM compatible system, which means every single DeFi protocol can port to it. It's not just like an L2. It's entire financial system that has emerged, and you're watching the birth of it. So yeah, 25,000% the last 2 years means nothing. Means nothing. It's a $5 billion asset. It's trying to break out of a dollar, and let's check back when it's nearing BNB status, market cap. Extremely comfortable with Matic. To get a chance to read the Git book for the project I messaged you about. My friend, I'm going to jump off this call in 30 seconds, and I got to do business, and I have no time. I wish I can do more, and I'm happy to take a look. Remind me in the coming days and weeks. How's the SDK narrative looking? Small, it's 0.1% of the portfolio, and I hold. I'm holding it. It looks fine. A hell of a team, wonderful people, wonderful tech. Those DAO wrappers are extraordinary. XBNTA is wonderful. Great products. Very separate narrative as compared to monetary networks. Very separate. So I see opportunity cost everywhere at this point. Plus, they want to come to Matic confirmation bias. I mean, they're just going to want to push the network with this critical mass monetary velocity. All right, I got to wrap it up. 12 p.m. Tuesday, May 11th. As always, I thank everyone for subscribing. 63 people in the stream, 28 likes. We can do better. Tell everyone to subscribe. Hit me up on Twitter. Stop by Discord. When I have office hours, I'm happy to help. And I'll talk to you soon. We'll see you tomorrow. Y'all have a wonderful day now. Peace.